Hello everyone, welcome back to my channel. I'm your host Miss KK, and on this episode we are debriefing the last knowledge quiz we did on Instagram. If you're new, thank you so much for stopping by, and if you're a returning subscriber, an awesome appreciation. So on Instagram every week we started something relatively new. This is the second week of the debrief, where I get to put up multiple choice question where you get to test your knowledge around financial concept so that you can just see where you stand with regards to some of these things. So last week we did taxes, and this week we are doing interest rate quizzes. We are mainly doing interest rate quizzes because we did see a hike in South Africa, and as you all know that our currency is pegged to the South African currency, so we are expecting Bank of Namibia to pronounce themselves around whether they're going to leave the repo rate unchanged or they're going to hike it up with the 50 basis point that South Africa has actually done. So that's why I'm raising awareness around this issue, so that when it comes you actually understand a few things around these things and you're actually not caught off guard. I have already done a detailed video about what repo rate is, who sets repo rate, and all of that, so you can check that out on my channel, and you can get to learn a lot more in depth about interest rates. So this is just going to be responding to the questions and elaborating why the certain options are correct and why certain options are actually not the correct options. All right, so the first question was around basis points. So interest rate is normally quoted in basis point when it's being adjusted. So for example, in South Africa last week we saw the South African Reserve Bank hiking the interest rate with 50 basis points. So my question was, what is 25 basis point equivalent to in terms of percentages? And I had 0.5, 0.25, 0.025, and the answer was really getting confusing. But to just lay some basic rules, 100 basis point is equivalent to 1%. So 25 basis point is equivalent to 0.25%. So that's how it's quoted. So that just means that in South Africa, interest rate went up by 0.5% last week. So if anything, we can expect the Bank of Namibia to hike the interest rate up between 0.25 and 0.5%. They're unlikely to go anything lower than that. So, but that announcement is likely to come up in the next couple of weeks, two weeks in maximum to say, if not next week actually. Okay, so the second question was then, who sets the repo rate in any given economy? And I already covered this in my video on interest rate, but I actually just put it out there so that we can understand who is actually in charge of these things. Like last week I asked who was a revenue tax collecting agency in Namibia. It's the same concept here, really. Who sets the repo rate? Who sets that benchmark that the economy runs? Because remember, interest rate is used to actually curb inflation, and we do know that inflation is actually expected to increase in 2022, especially around the petrol price that has been hiked up, and currently we have a temporarily suspension of fuel levies, and that means that as soon as this is lifted, that impact will still continue to be felt by the consumer. In June or so, we are expecting another energy hike prices that's coming, so inflation is actually increasing, and that's why the central banks are actually using interest rate to control inflation. Again, I also have a detailed video on what's the link between interest rate and inflation, and why the bank or central bank in any given economy finds it very necessary to increase interest rates when inflation is increasing. So in Namibia, the central bank is Bank of Namibia, and the rest of the banks, Standard Bank and FNB, are incorrect because they are commercial bank. Development Bank of Namibia, although it's a government banking agency, it's actually not the central bank, so they are also acting fulfilling a role of a commercial bank, but just from a government perspective. So the central bank in Namibia is the one that sets the repo rate, and it's normally announced by the governor of Bank of Namibia. Okay, and that brings us to the next point on who is the long-serving governor in Namibia. And I had a few other random names that you probably thought I actually made them up. I didn't. Those are actually, the first two are actually governors, but pre-independence. Actually, the first two were just immediately after independence, and the rest were the ones that we know growing up. We saw Tom Alwendo signing off the Namibian notes, and now we saw Ipumbushimi also signing off, and obviously now Ipumbushimi has moved on. We actually have a new governor. So the tie really was between Tom Alwendo and Ipumbushimi, but actually Tom Alwendo signed tenure was the longest. Tom Alwendo served for 13 years, whereas Ipumbushimi only served for 10 years. So that was just like for an interest sake. It's not that it's gonna impact your financial decision of who the longest serving governor is, but it's just something good to know that the longest has served 13 years and Ipumbu served actually just 10 years. The others served between 2 and 5 years, so they weren't actually in office for that long. To move on to our next question, we actually asked around the risk profile. Which of the following behavior is likely to increase your risk profile. So just to take a step back here, I also did a video about, you know, how to access your credit report and what behaviors you need to try avoid to make sure that you're not increasing your risk profile, because it just means that if you are considered a high risk, the bank are going to charge you a lot higher interest rate. But if you are a low risk, then you're likely to get a very competitive interest rate, and the lower the interest rate you will get, the more it's going to be affordable for you in terms of borrowing. So the first thing was, when you make your payment on time, that's actually a good habit. If anything, that's going to reduce your risk profile. Secure debt means that you actually are out there getting debt that is attached to items that are valuable in nature, and if you are to default, lenders will actually have something to attach as you know, as payment for their debt. So that means also secure debt is unlikely to increase your risk profile. The other thing that I put there is multiple bank accounts. When you have multiple bank accounts, it doesn't necessarily increase your risk profile. If anything, it actually gives the lenders enough information to see, okay, if you have 3 bank accounts and you always have money, you never go in an overdraft, you don't have bounce payments on those accounts, it will give them information about your payment history, which is likely to reduce your risk profile. So if anything, the lost answer that's left is multiple requests on your credit report. And more about multiple requests on your credit report, please check out the video I did about credit report and how to access it. But every time you go out and look for a new debt and someone actually inquire on your credit report, so if you go look for insurance, the insurance company will go and inquire your credit report. If you go to a cash loan, the cash loan will put in an inquiry. If you go to the bank for car financing, they'll put in an inquiry. If you go, basically every time you borrow money, an inquiry is lodged on your report. So the more inquiries we have, the more it's likely to show the potential lender that actually Klesina is out there getting too much debt, so potentially she's a high risk client. So that's basically the reason why I actually brought that topic up. So again, go and check that video, and if you don't know, you can actually access one free credit report each year. And although your self-inquiry goes onto that credit report, it doesn't impact your risk rating. So if I go and request my credit report today, next time I request it, it will show that Klesina actually requested her own credit report, but the potential lenders will be able to see that inquiry was a self-inquiry, so it doesn't actually show up as multiple instances of people looking for a credit report. Okay, so that's the last that's the one more thing we did discuss in that Knowledge Check Friday. And I think lastly is, when was the repo rate adjusted in Namibia? And I had a few things where I had last year, I had February this year, and I had April this year, and I had May this year. So the correct answer is actually April. The repo rate was adjusted last month, and it was also adjusted in February this year. So collectively this year, the repo rate has already gone up by 50 basis points. It was first 0.25% in February and another 25 basis points in April. So we can actually expect another hike, and if the Bank of Namibia follows the South African route and actually hike the interest rate by 50 basis points, that means cumulatively the interest rate would have gone up in 2022 by 100 basis points. Why am I bringing the South African issue in the Namibia context? As you all know, that the Namibian dollar is equivalent to 1 South African rand, and South African rands are actually used in Namibia. So there is an agreement between Namibia and South Africa where the Namibian currency is pegged to the South African currency. Pegged means I attach my value of something to your value. So whatever happens to the South African currency is likely to spill over. And interest rate has a big impact in the financial market, and borrowers and investors actually make a decision on whether to plow money in an economy or take money out of the economy depending on the interest rate. So it's in a good interest of Namibia to make sure that the interest rates are in line with South Africa, so that they can retain that one-on-one exchange currency. So it's highly unlikely that we're not going to follow what South Africa does. So please bear in mind about this interest rate hike and how it affects you. Is if you have a home loan, if you have a car loan, personal loan, etc. If your loan is variable, it's likely to increase. Your installment is likely to increase. If your loan is fixed, you are unlikely to be affected. And in particular, if you also have money in the bank, it's not always mandatory that the bank should pass on this increase in interest rate to the consumer. So you must always also go back to your bank account and see, is your interest rate increasing now that repo rate is increasing? And if it's not increasing, you must start evaluating whether it's actually worth it having money in that particular bank account when you could potentially be earning money elsewhere. And yes, that wraps up our second Knowledge Check Friday. We look forward to your participation in next week Friday, and until next time, it is goodbye, and please stay safe.